I am with the Kelly Zitlow, a local lender here in Arizona. I would say the best local lender here
You're so
in
sweet.
Arizona.
Thank you. Thank you.
No, seriously, I feel like the tools that your team uses and the way that you guys really break down the process, I would say is unmatched.
Mm.
So that's why I wanted to talk to you a little bit today and go over a few things because I have something really exciting coming to the market here soon. I have a house in Surprise that's going to be listed. This is a first-time home buyer price. We're 373,000, which is under the average home price here in Arizona. So I'm super excited and I want to talk to you about what kind of programs we can utilize when someone's looking to purchase this house.
Well, thanks so much for having me, Victoria. First and foremost, this thing's going to fly off the market. Like, it just is. So, girl, you
Yeah.
better get ready, have your tennis shoes on, stay hydrated, because at that price, and unfortunately, there's just not a lot out there, under the median now, which is what I think 455 last time I checked. And
Yeah.
yeah, so this is exciting, and it is a perfect first time home buyer home. So what I'd like to do is, if it's okay, I prepare some numbers. And the reason I do this, Victoria, as you know, is I think that sometimes when we go through the home loan process or the thought, especially as a first time home buyer, there's a lot of emotion and excitement and confusion and can I not? So we just like to chunk it down and break it down and really show some options. So bear with me. I'm going to do a little screen share here. And let's just look at some options for this particular home.
But
Can you see my screen?
yes, you're
Okay.
good.
What we did was we're showing four different options. And the first one, first column, is going to be an FHA loan. FHA loans are fantastic, especially if the buyer is looking to receive a gift from a parent or family member or friend or close relationship. So FHA requires a 3.5% down payment. But the other cool thing about FHA is a parent can co-sign for their child. And many times that just kind of gets them over the hump. So maybe they recently graduated, or maybe they're in transition from one job or one career to another, and maybe they just aren't in a position to be able to qualify yet on their own. Know that FHA really makes it easy for parents to co-sign for their children. And I would tell you, Victoria, I don't know what you're seeing, but we're seeing a lot of parents who are in a position to contribute to helping their children buy. They are, in fact, doing that. What are you seeing out there?
Yeah. I mean, I had a client that used that program last year, actually.
Yeah.
So they were a first time home buyer. They're just getting started in their career, and his parents were able to help with the down payment. And also, if I'm not mistaken, I don't think they even put 20, you don't have to put 20% down if you're the parent
No, three
co-signing
and
on
a
the
half percent
FHA
down
home loan.
payment is the minimum down payment on FHA, even if you're getting a gift from your parents or even if your parent is co-signing. So it's kind of cool.
And I think that's so impactful. So again, you do not have to put 20% down if you currently own a home and you're helping your child
Yep.
purchase their first home. For their first home, you can do the 3.5% down.
Yeah. So let's walk through this. If we look at the FHA first column, we're looking at a purchase price of roughly 373, and the loan amount with the upfront mortgage insurance premium, which is charged on FHA loans, that's a program standard. So there's no way out of it. It is their upfront mortgage insurance premium, and again gets financed. So it is in the loan amount reflected there at the 366, 250, or 244. Going interest rates right around now are about 6.5%. And I'm going to show you cost here in a second. APR on that. Remember, an APR is the annual percentage rate. So it's going to take into account the note rate, but it's also going to take into account certain closing costs together with the cost of mortgage insurance. So it is a different figure, but the actual note rate, if you were locking in today under example one, would be 6.5%. And then the total monthly payment here is estimated at $28.39. Now I'm going to break this down for you so you can really see how the payment breaks down, because I think that's key. And then lastly, the cash to close in scenario one is roughly just under $25,000. Now the cash to close includes the down payment, as well as all of the closing costs that we know are out there. We're not going to lowball this number. If we know it to be true, that's typical for a particular area, then we're going to show those fees. So I'm going to send you this link so you can play around with it, which I know you will do. On the more information tab, it's going to show us now the breakdown. So the principal and interest payment in scenario one is that $23,1492, and then property taxes for the property on St. John are $133.42. We're guesstimating on hazard insurance, which is homeowners insurance. The buyer will contact their insurance company if they need a referral. You or I can provide one, and their insurance company will give them the annual premium. The insurance company is going to want to be paid that annual premium at close of escrow, which you're going to see we've accounted for here. And then we're going to take that divided by 12, and that premium is also included in their monthly payment. Mortgage insurance is required on FHA loans, so that's roughly $164 a month. It's going to bring the total monthly payment to $2722.47. So that is what we call PITI. That's essentially the check that you're writing to the lender every month. Now, my first screen, and even this screen, is going to show you that total payment of $28.39. The reason that it does is that we like to ensure that we have full transparency, and this property has a homeowner association. It's a monthly due of $117. So in that case, we just want people to know that their total expense per month is roughly that $28.39. So again, that's not the amount you're writing the lender every month, but from a budgeting standpoint, that's what you would want to budget for. I'll pause there. Do you have any questions on that scenario?
I don't have any questions, just to comment on why I love these tools that you use for the everyday or not everyday home buyer. You know, this is a person that's buying their home for the first time, and I think it's so important to have the HOA fees in there because they're not part of your mortgage payment, but they are part of your budgeting.
That's
You're going to have to pay that every month. So
absolutely. And I love the fact that it just gives people options. You know, I think it helps to empower people, you know, and it helps them to make an educated decision based on the options presented. And so option two, maybe we're talking with a potential buyer for your property on St. John Street, and they're just like, look, I don't have anybody that can give me money. I, only have $14,000 set aside, let's say. And so option one in that scenario wouldn't work. Well, there are down payment assistance programs out there. And so that's what we're showing in option two. Still an FHA mortgage, but we would be using the down payment assistance programs. Now, keep in mind, the down payment assistance programs that I'm referencing here, as well as the grant in option number 4, they all have certain qualifying criteria. So if you are interested in purchasing this home and you want to walk through to see if you can qualify for the down payment assistance or the grant, just reach out to us, 480-725-0150. We can have a quick conversation and let you know if you are eligible. The programs have their own guidelines. With that said, the down payment assistance program has slightly lower interest rate at the 6.375%. Going to drop that monthly payment to $28.09. Remember, again, that does include the homeowner association fee, even though it's paid separately. But it reduces the cash to close dramatically. Look at this. I mean, now we're going from, the $24,492 to $10,253. So option 2 is a great option. Again, we'll go over here to the more information tab, and we're going to see the same things. You're going to see that the total monthly payment is slightly less than option 1. And the reason it's slightly less is that that interest rate was 1/8 lower. I do want to just say, though, this is just such a great example of how an interest rate can impact the mortgage. I think sometimes people think that for every 0.125%, so in the mortgage industry, we call that, an eighth, and mortgage rates run in eighth increments. People are always like, oh, I need that lower eighth. Well, sometimes, it's just good to kind of run the math, and you're going to see that there's not a huge difference. I mean, it's roughly $26 or something like that difference as far as the actual payment. So just, again, food for thought, understanding what is the interest rate impact to my monthly payment. And on average, think for every $1,000 you borrow, it's roughly $7 a month, right? So that's kind of quick math that you can also just do on your own. But that number would not account for property taxes, homeowners insurance, or mortgage insurance, which is all laid out here. And then there is that $117 a month for HOA.
Is there an income limit to these?
Yep.
I know that's a part of qualifying, but I don't know if there's like a blanket income limit
Yeah.
that someone.
So the down payment assistance program, together with the grant program, they are going to have specific eligibility requirements, and they differ. So again, that's why, and there are other options out there. I just picked these two to kind of talk with you today about, but it is important to get with a lender and ensure you qualify for whatever the program is that you're interested in.
Okay.
Okay. Column 3, which is a VA home loan, one of the best home loan programs in the country. If you've served in the military, the National Guard, or the Reserves, you might be eligible for a VA home loan. What's so beautiful about it is that it allows for zero down and it does not have mortgage insurance. It's such a wonderful benefit. And there's all different ways that you can structure a VA loan and myths about VA loans. So again, if you have buyers that come look at the property, Victoria, and you find out that they may have VA home loan benefits, absolutely have them pursue it, because it always pens out. I mean, look at this. So in column number 3, you're going to see an interest rate slightly lower than FHA at roughly 6.25% on a 30-year fixed rate. You're going to see the APR lower at 6.628%. Why? Because there's no mortgage insurance. And as I mentioned earlier, that 7.4% and even the 7.174%, those APRs include mortgage insurance. Well, there is no mortgage insurance on FH or on VA loans. Now, VA will charge a funding fee unless there is a service connected disability. And if that is documented and the lender can substantiate that in the file, then the VA waives their funding fee. So in this case, we have rolled into the loan 2.13%. That's the VA funding fee for first time use of your VA home loan benefits. This is an often asked question, and that is, well, I've used my VA home loan benefits once. Can I use it again? You absolutely can, as long as you have full eligibility. But the next time you use it, if you use it with zero down, then the VA is going to increase that funding fee to 3.3%. Again, it can be financed into the loan, so it's not cash required out of pocket, but that's how it works. And then in this scenario, it's going to bring our closing cash to close down to $11,585. So I mean, just look at that in comparison to column number 1. That's why I always get so excited when we have VA buyers, because it's just a great tool.
Best loan out there
I know, I love it.
is
And
what it
I
sounds
mean,
like.
here's a little secret too. A lot of people don't know that VA home loans aren't just for the entry level buyer. So, about 60 days ago, we closed a purchase for a buyer who was purchasing $1.9 million home. And you're like, well, you can't
Wow.
use a VA home loan for that. Yeah, you can. He had a service connected disability, so he was able to do zero down on 1.9 purchase price without mortgage insurance. Like, I mean, it just
That's
doesn't exist.
wild.
You know? So it was fun. Okay. And then we'll wrap up with our column number 4, which is this conventional loan. This one happens to be a 3% down payment grant. The thing we love about this is that it is truly a grant. So it's funds that are given to the buyer. Yes, there's certain income and certain qualifications that a buyer would have to meet, but when they meet them, it's a pretty cool program. That rate is 6.99%. It's going to take the payment to $29.49 a month, and it brings the cash to close to $15,623. I'm going to pop over here and just kind of do a side-by-side comparison. So you're going to see on the conventional 3% down program that mortgage insurance is a little more expensive when compared to FHA. And I'm often asked, like, well, what's the best program? The answer is it's specific to the borrower. There is no best
Mhm.
program. It's what's best for you. What are the
Oh, yeah.
objectives? What's the budget? What are you eligible for? And then once we know that, then we can really kind of dive into what would the best be, or at least the recommendation. And then here's the closing cost tab. I do want to kind of walk through this. So in this scenario, you're going to see this line item called discount points. And that's really important, Victoria, because discount points are a cost associated with a rate. And again, as first time home buyers, there's a lot of jargon that's used in the home buying process, both from lending and real estate and title. So we want to be sure that we're being crystal clear. And that very often people are like, well, what is this for? In these scenarios, anywhere you see the points, that's a cost that you're paying to get that particular rate that's quoted. So let's say you come back and say, look, Kelly, we're really limited on our funds. We don't have an option for a gift. And even in the FHA scenario, I can't, or in the 3% down grant scenario, I can't swing, 15.6 in cash to close. In that scenario, we could look at increasing the interest rate and decreasing the discount points to then reduce the cash to close. So again,
Yeah,
tailored strategies based on each individual's footprint and what they're hoping to achieve.
that makes sense for sure. So really, the 3% down grant would be for someone that doesn't have the funds up front, but has the ability to make a higher monthly payment.
Yes, that's exactly it. And again, all of these scenarios would allow for a gift from a family member or relative. Again, I think sometimes people get confused by, well, does it have to be just for the down payment or just for the closing cost? It can cover both. It can cover a portion. Let's say your grandma and grandpa can give you $4,000, or you're just getting married and you're getting gift money from getting married and you want to use that to purchase a home. There's a lot of different ways that we can structure the home loan, but those monies can be counted. And then again, grandma, grandpa giving you $4,000, you would take $4,000 off any one of these scenarios, and then that would give you kind of a funds to close estimate.
Would you say that there's a downside to any of these programs versus getting a grant or not getting a grant?
Well, I love the grant because there's no, other than the higher interest rate, there's no requirement, meaning you don't have to stay in the loan before you could refinance or things like that. In the DPA programs, many times they have a 3-year provision that says that you cannot refinance or sell the house without paying back a portion of the grant that was given. Sometimes they're 5 years, like they all vary. So, the DPA programs generally have some type of uh, extra knowledge that you need to know about how the program works. But the grant program is, what's cool about it is just that it's just money at closing, which is,
Okay.
pretty cool.
I think it's such impactful information. And I know that sometimes it could seem like a lot, but trust me, if you talk to Kelly's team, anyone on Kelly's team, they can break everything down for you. So that way, when we're ready to write an offer and you're wanting to look at what the different payment programs are, they do this for you, which is amazing.
I'd like to just add to Victoria that as a first time home buyer, I think sometimes it's just intimidating. It's intimidating,
Mhm.
and it doesn't need to be. That's what I want to make sure everybody out there knows, that it doesn't need to be intimidating. And we will walk you through every step of the process. We like to start with just a conversation, a 15-minute conversation, because once we do that, then we can get to know each other. We also can start to better understand what is going on in that person's life, what their objectives are, and start to build a strategy around it that best serves them. So it doesn't have to be big. There's a lot of moving pieces to go through it. We hold our first time home buyers' hands every step of the way. And it's just such an exciting time too, in their lives.
Yeah, for sure. I wish I knew you when I bought my first house.
Oh, I feel like we've known each other for a while, but that's right. You did not know me when you bought your first house. So, I mean, on that
Yeah,
note,
I
when you
was
bought your first house, where was your mindset?
um it's funny because I think about me and my husband are completely different
Yeah,
personalities, right?
yeah.
I'm more of a leap of faith kind of person of like, we'll figure it out once we're there and everything will be good. And my husband is the analytical type. So he's like, I need to know, what are we getting ourselves into? Like, what is this going to be as far as like monthly budgeting, because it is a big commitment from only renting to buying a house. So we had to think about repairs and like what's going to happen with all that stuff. So I think the budgeting part of it would have helped my
Mhm.
husband in particular, Josh, with like just wrapping his head around it and not feeling overwhelmed, because it is overwhelming to think, wait, what do we need for closing
Right.
costs again? But we put the earnest money down.
Yeah.
So is that not our down payment? Like all the different terms definitely got us all like, what is happening?
Right. And what's cool
Yeah.
about this tool that we use is so we use this up front in the pre-qualification stage, and then we get our buyers out shopping. And then once they go under contract, we get that purchase contract. We're going to adjust the numbers based on that specific property. And we're going to add the fact that they've already deposited with the earnest money into escrow or the title company, their earnest money funds. So then we've already adjusted for that in this analysis. And so as they move through from that contract to the day they get their keys in hand, we're adjusting as things change, such as maybe homeowners insurance comes in less than what we quoted. Great. We're going to go in and pop that in. And then those numbers just change so easily. That's why we use it. And, it's very efficient. And it's just a great visual aid for people to really see what's happening with the numbers.
Yeah, super helpful.
No, we're always here for a second opinion as well. I think sometimes just having that extra set of eyes on the strategy, because that's what this is. That's what home lending really needs to be. It needs to be strategic based on the objective of the person borrowing the money. And so we're happy to take a second look as well.
Thank you, Kelly, so much for presenting this information to us today. If you are interested in this property that I'm talking about today, or really any other home, especially in North Phoenix, make sure to call or text the number here below. Thank you so much.
Thanks, Victoria. Bye, everybody.